The sudden, sensational collapse of Silicon Valley Bank, SVB, which had assets of over $200 billion, hit financial markets like an earthquake.
In today's ever-evolving world, the ground beneath our feet can shift in the blink of an eye, especially when it comes to the pillars of our financial system. But what we're uncovering today isn't just a small tremor. It's a seismic shift that could redefine the way millions of Americans interact with their hard-earned money. The Consumer Financial Protection Bureau unveiled long-awaited changes to how the nation's biggest banks structure different overdraft protection plans. The independent watchdog agency said the new rule closes a loophole that for decades has exempted overdraft loans from consumer protections, as required by the 1968 Truth in Lending Act. Since 2000, American consumers have paid an estimated $280 billion in bank overdraft fees, according to CFPB data. During that time, the annual revenue of big banks derived from overdraft fees soared, helped along by the boom in consumer debit cards tied directly to checking accounts. Imagine you're a person who uses credit cards for your business needs. However, very recently, you identified that you were spending too much money on overdraft fees and, hence, decided to reduce the use of credit cards. Is that a better approach? In a statement on the new regulations, President Joe Biden stated, "For too long, certain banks have levied outrageous overdraft fees, sometimes $30 or more, that sometimes hurt the most disadvantaged Americans the hardest, all while banks flatten their bottom lines. It's exploitation. Banks call it a service." According to the CFPB, only banks with assets of more than $10 billion on roughly 175 institutions nationwide would be subjected to the new rules. When combined, these institutions usually bear the primary responsibility for the majority of overdraft fees assessed within a given year. Officials from the CFPB stated that they anticipated the rule to be completed in the upcoming year and implemented in October 2025. Banking trade associations that are adamantly against any modifications to the overdraft policy have already started organizing resistance, and we can anticipate this is only going to get stronger. The Consumer Bankers Association began promoting the value of overdraft services and why government regulations are foolish on a website earlier in January. The plan is part of the broader initiative by the Biden administration to combat junk fees, which are frequently levied against customers without prior warning and don't accurately represent the true cost of the service. Biden stated, "This is about the firms that take advantage of hardworking Americans just because they can. Does this mean that the commoners like us will benefit? Or are there any hidden agendas behind the law?" Do share your thoughts in the comments. Large banks would effectively have two choices for how to handle commercial overdraft coverage under the proposed rule. If the big banks treated the money they advanced as credit line loans and complied with all Truth in Lending Act standards, they might profitably issue overdraft loans under the first alternative. Additionally, the CFPB stated that banks choosing to set fees commensurate with their expenses would have to determine those expenses mostly from the losses on accounts that are never made profitable again. The CFPB described the issue in a report from December 2023, but these safeguards may prevent consumers from being taken aback by overdrafts and the associated fees. Thus, we move on to the second alternative. The second choice is for big banks to keep providing overdraft protection to customers as a courtesy service instead of a line of credit that generates income. The funds would remain free from TILA requirements as a courtesy service. However, a CFPB fact sheet stated that banks who provide courtesy overdraft coverage would only be able to collect fees in line with their cost or according with the agreed benchmark in exchange for the ongoing exemption. The agency put forth a number of possible benchmark rates, with each transaction costing anything from $3 to $14. When the rule is published, which should happen sometime in the upcoming year in 2024, we're going to disclose the ultimate sum. Now, let's have a thought. Imagine that after a new law has passed, the credit users followed a down step. In the scenario, if credit card businesses are willing to put forward something that will benefit the users, then for sure the credit card business won't go down. The losses incurred under the approach may be small because checking account overdraft coverage has comparatively modest principals and high rates of payback. The majority of debt card overdrafts made by customers total less than $26 and are settled in 3 days. According to a Federal Deposit Insurance Corporation report in 2021, the average overdraft cost was approximately $35 per transaction, which was greater than the average overdraft, according to Chopra. Many financial institutions have looked for ways to ratchet up profits from their deposit account users because the loans are so profitable. He added, "A cat and mouse game has resulted from this, requiring us to commit a lot of resources to prevent illicit activity. For some years, the CFPB has been closely examining banks' policies on overdraft fees. The agency mandated that Atlantic Union Bank pay $6.2 million in December 2023 for forcibly enrolling thousands of clients in overdraft checking account programs. In 2022, Regions Bank was mandated to reimburse $191 million for unforeseen overdraft charges associated with specific debit card transactions and ATM withdrawals. Banks developed a service decades ago that let some checking account holders go negative in their accounts so that the paper checks wouldn't bounce. With the widespread usage of debit cards, which encourages users to regularly withdraw little and large sums of money from their bank accounts, what had formerly been a specialized service for the banks turned into a huge profit center. The banking industry has profited greatly from overdraft fees, according to the CFPB. Banks have made $280 billion in overdraft fee revenue in the last 20 years. One bank CEO called his boat the overdraft, since these fees were so well liked. However, banks have modified their overdraft policies in response to public and political pressure in recent years, raising doubts about the necessity for government regulators to intervene at this time. In order to prevent fees, the majority of the largest banks have implemented protections that enable their customers to move their account balance back into positive territory. For instance, after cutting its overdraft costs from $35 to $10 2 years ago, Bank of America, which was long viewed by industry experts as the greatest abuser of overdraft fees, stated that its revenue from overdraft fees has decreased to less than 10%. The new regulations will take effect in the fall of 2025 if they are approved and withstand political and legal challenges. As we know, the current situation is friendly to inflation, and it's trying to defeat our monthly incomes. In that case, should we think of inflation as the major contributors to overdraft fees? Banks have long maintained that they might completely stop offering overdraft services as a result of government requirements. Bankrate estimates that around 9 out of 10 banks will provide the service, despite the fact that some banks have done away with overdraft fees and established accounts that are negative balance protected. This proposal, if implemented, has the potential to rob millions of Americans of much-needed emergency safety net and drive more customers away from banking systems, stated Lindsey Johnson, CEO and president of the Consumer Bankers Association, which represents the larger consumer banks in trade and advocacy. Not every bank requires this level of regulatory intervention. While Bank of America opened a new tab and reduced its fees to $10, Citigroup opened a new tab and eliminated overdraft charges 2 years ago. However, they are anomalies. According to regulatory documents, the megabank headed by Brian Moynihan earned slightly more than $100 million in overdraft fees in the first 9 months of 2023. However, Wells Fargo and JP Morgan opened new accounts about 7 and 8 times, respectively. However, small banks also impose large fees, frequently on their less well-off clientele. What are your thoughts on the rising overdraft fees? Let us know in the comments. And there you have it, the looming financial tremor that could redefine the way millions of Americans interact with their hard-earned money. Before we wrap up, if you found today's content insightful and you're craving to stay ahead of this rapidly evolving financial landscape, why not take a second to hit that subscribe button? Your support fuels our commitment to bring you the most up-to-date and crucial financial news and strategies. Stay tuned, stay informed, and until next time, keep your assets guarded and your minds open because in this financial chess game, it pays to be 2 steps ahead.